The Purchasing Managers Index, the PMI, which is an indicator of the health of the manufacturing economy of South Africa, has been released today. And in the studio with me to go through the number is Hugo Pina, our senior economist at the Bureau for Economic Research based in Cape Town. Hugo, thanks very much for joining me. 49.1. It's quite a nice bounce back. I mean, there's two ways to look at this. Good cop, bad cop. Optimist, pessimist, you can say it's edging towards 50, so that's very good after a fairly dodgy number the previous month. But on the other hand, the pessimists will say 5 months below 50, so 5 months of contraction. Where do you stand?
Yeah, 100% right, but I think I would stand more in the fact that it is going up. So you're right, it's still below 50, it still tells us the sector is under pressure, but the trends are in the right direction, especially if we look at some of the subcomponents as well.
Yeah, in fact, I like the way that you bring the really good points right to the top of your report. And let me tell you this now. The marginal rise in headline PMI, you say, masked sharp movements in the key PMI subcomponents. On a positive note, the seasonally adjusted business activity, new sales orders and inventory indices posted solid gains. Let's start with business activity.
Yeah, so I mean, we know, going back to the third quarter of last year with the mining sector strikes, but also some strikes in specific manufacturing subcomponents, production was under pressure. In the GDP numbers in Q3, not a lot happened in terms of manufacturing. So this does suggest that slowly that business activity or production is starting to recover. Remember, even in the actual manufacturing numbers from Stats SA in October and November, already we saw a bit of a recovery there. So these numbers, not great, but hopefully we continue on that trend.
New sales orders is one that, from a simplistic point of view, I always think is probably the most important, because if a purchasing manager says that in the future I've got an indication that I will need to have more stuff in order to fulfill demand from my customers, therefore I have to put in new sales orders. Is it as simple as that? And is it significant?
Well, it certainly is significant, that jump that we saw. So we like to think of the new sales orders as just purely an indication of demand for manufacturing goods, basically what you're saying. So the fact that has jumped up quite nicely does suggest that the demand, and just bear in mind, we don't distinguish here between foreign and domestic demand. It's both. So some of the guys that fill it in will be reacting to foreign demand, some of them to domestic. So it may be a combination of the two, that although things in Europe are still not great, there has been a bit of a stabilization. And to come back to the mining story, the fact that mining production is recovering domestically, that might also tell us that domestically the demand is a bit better.
And you also say, I mean, on the note of distinguishing between domestic and international demand, you say the rise in new sales orders may be an indication of increased foreign demand for SA manufactured goods. Can it be the case that in the short space of time that the rand has weakened quite significantly from 850 to 9, that people are that sensitive that they start placing orders for South African goods simply because of that 50-cent move?
Look, I mean, we'd be speculating. It may be, but I would think it's probably a bit too soon. I think you would probably have to see the rand remain at these weaker levels. But of course, bear in mind, the rand has been weakening for quite some time. I mean, the whole of the second half of last year, basically, we've been on a weakening trend, and now that has shifted up to a further level above 9.
But there's also a case to say that a South African good that has been produced at 850, slightly too expensive for a foreign buyer, at 9, right in the sweet spot.
It may be. It may be. I think it is part of the story, but I think that we've run some numbers over the years. The key factor that determines our exports is not necessarily the rand, it's simply demand from the rest of the world.
Yeah, I agree with you. Actually, I don't think that there's a great correlation between a weak rand and a buoyant manufacturing sector. Maybe very, very long term, if the rand's weakness is orderly and people adjust to it, then that's the case. Okay, let's ruin everyone's weekend now. We've got all the good optimistic stuff out the way. Let's get back to pessimism if we can. Unfortunately, it says here, you say here, the latest PMI results also contain some worrying developments. After a more than 7-point decline in December of last year, the employment component, you say, lost a further 2.4 points in January, and that's despite some sort of tentative green shoots signs of employment from various other indexes that we follow on CNBC Africa to show that some jobs were being created. You're not seeing that?
No, I think if we look at the official data that we have for employment from Stats SA, the quarterly employment statistics, we only have it up till the third quarter of last year, unfortunately. But there, it was flat in terms of manufacturing employment on a quarter-on-quarter basis. If you compare it with a year ago, 4,000 down. Now, of course, since then we've had, well, that was in the quarter we had all the labour issues, of course. Now, that doesn't seem to have been resolved totally, as we know it now spread to other sectors. So it may just be that the manufacturers are just, they're not in an environment where they see it is appropriate to be employing more people. There's still a bit of uncertainty in terms of demand, although, as I say, that is improving. So I think there's a number of reasons to be a bit cautious on the employment front.
Also be cautious on the PMI price index, increasing by 2.3 points to 82. Now this is interesting because CPI has come out at 5.7%. That was the last print we saw. We saw PPI coming out yesterday at 5.2%. And I was speaking to Marina Willemse from the Efficient Group. And 3 months in a row, prices at the factory gates have remained static. And yet your figures show that prices are picking up.
Yes, there has been a bit of a divergence in the last couple of months between our price index and the official PPI, as you pointed out now. Over time, it does track very nicely. So what I would say is, I think what we are already picking up now is in terms of input costs, the impact of the weaker rand. Of course, that comes in quicker than, for example, on the export side. I would argue that it has a immediate almost impact on the input cost side. And then, of course, the oil price has been picking up, unfortunately. So we know later today the DMR will tell us what the petrol price is going to do next week. We're probably in for a substantial increase. 40 to 45 cents, I would imagine. Yeah, I think somewhere along those lines. So the point is I think what we are probably picking up here, that must still be reflected in the actual numbers.
Last time I spoke about the previous month's figure with Abdul Davids from Kagiso, he was cautious stroke pessimistic about 2013 and the prospect of the PMI getting above 50. Do you share that caution?
I think, if we look at what is happening internationally, certainly we've had not a bad start to the year. The real economy is not great in Europe, but the financial markets, I'm sure you've spoken a lot about that, have really stabilized, actually quite buoyant. So if that transmission moves through into the real economy in the likes of Europe, the US, I think there is sort of room for mild optimism, but I mean, I don't think you're going to see very strong growth in the manufacturing sector. But you may well see it moving back up above that 50, but probably not significantly above that.
Do you think the worst is over? I think this is the key point. It's like we talked about the Eurozone last year. It seems that the worst is over there. Have we bottomed in South Africa?
I think that is a very good question. I think certainly it seems like the worst is over internationally. The reason why I can't really answer that question is we're not quite sure how these labour issues are going to pan out. I really think that we, in terms of the domestic constraints, it's not clear as yet. If you just talk about the foreign demand story, I think yes, we probably have hit a bottom there, but it's not clear to me how the domestic story is going to play out.
Hugo, we'll leave it there, but thanks very much for coming in this lunchtime. That's Hugo Pienaar, Senior Economist at the Bureau for Economic Research.